should you get a fixed rate mortgage or a variable rate mortgage? And it's actually not so much about rate, even though that's important. The determining factors is actually based on two things: your budget and your risk tolerance. Hey guys, my name is Felix Chan, realtor and mortgage broker with the LiveInnerCity real estate team, where we bring you the best real estate tips, mortgage advice, and home tours. Okay, let's get into it. Now, I'm going to explain what the difference is between the fixed and the variable rate mortgage, and I'm going to show you a graph of where the 5-year fixed rate could be going, and explain afterwards what you should consider when determining if you should get a fixed or variable rate mortgage. Okay, now the fixed rates, they are correlated with the Government of Canada bond yields. So here I have a graph of the 5-year bond yields. So this gives us an indication of where the 5-year fixed rate is going. If you want to know where the 3-year fixed rate is going, then you look at the 3-year Government of Canada bond yields. Now this is a monthly chart that I've pulled up here. Okay. And before I move on, I just want to let you know that for the variable rates, they are based on the Bank of Canada's prime rate. Now, the Bank of Canada meets 8 times throughout the year, which means that they are able to change the prime rate during these meetings. Okay. And I'm going to explain why that's relevant soon after this. So again, this is a chart of the 5-year bond yields dating pre-1987. This is a monthly chart, and you can see that we were in a bearish trend, and we broke through the bearish structure on November of 2016. Okay, now I'm used to drawing support and resistance lines for equities and cryptocurrencies, not so much for the bond yields. And I think that it kind of gives us a decent indication of where we might be going. So I drew a support line here, and this kind of goes back from 2011, or I guess starting in 2013, because we do have a support here. We do have resistance here, another support point, and now you can see that we are above this support line. Now, we're still above the resistance line, okay? And the thing that we need to keep in mind is that even though we broke a newer high recently, this is a lower low, okay? And even though this part didn't reach up high, we're still kind of testing that right now. So I think that if we were to hit up and come close to this where the top is right here, then it could break through, right? And so that's kind of where you have to keep in mind of, okay, well, fixed rates will actually get much higher than the 2018 high here. And as long as it stays above this resistance line, then we would probably be trading sideways for a little bit, and that's what it looks like we're doing right now. Now, if you want to have a more immediate chart, you can always take a look at the weekly, and you'll be able to see a little bit more of the ups and downs. So you guys can see that from summer of last year to today, we've just kind of been on a tear. Now, will this continue? It's hard to say. Obviously, I don't have a crystal ball, but I wanted to give you guys this resource so that if you want to know where the fixed rates are could be going, then this is an indicator that you can look at. All right, now the difference between the fixed and variable rate. Now, variable rates are based on the prime rate. So anytime the Bank of Canada changes prime rate, so too will your mortgage payment. It could go up, it could go down, chances are it's going to go up. Now, in times of high inflation, the central banks typically increase rates. Economists have been predicting they could go, prime rates could go up as soon as this month, here in January of 2022. How high will it go? It's hard to say. But this is the formula of finding out what is going to be best for you. So as an example right now, chartered banks for both the 5-year fixed and the 5-year variable, okay? The 5-year fixed is around 2.89%. The 5-year variable is 1.65%, a difference of 1.24%. Typically, when the Bank of Canada changes the prime rate, they change it in increments of 0.25%, so 0.25%. Sometimes they may do something less at 0.15%. Okay. Now let's just say, as a baseline, they would change it in 0.25%, a 0.25%. So with a difference of 1.24%, that means that the prime rate would basically have to go up 5 times for you to break even to what you would be paying at a fixed rate today. Okay, remember, 5-year fixed rate is 2.89%. The variable rate is 1.65%, a difference of 1.24. Now, the rate is important, but when you're determining what is best for you, it really comes down to 2 things. Number 1, does your budget allow you to pay the higher payment if the prime rate were to go up 1.25%? Okay, you can be conservative and even say, well, what happens if rates go up, if my variable rate goes up 2%? Get your lender or mortgage broker to calculate what that would look like and see if that's within your budget. If it is in your budget, then the second question you have to ask yourself is, will I lose sleep at night? Okay, because if you can't afford that higher payment, or it's going to be really stretching your budget and your risk tolerance doesn't quite allow you to go that high, then it makes sense to go with the fixed. But if you have the budget and you're not going to lose sleep at night, then historically, the variable rates usually win. It's a little bit of a unique environment that we're in today, just because we have such high inflation. But that is basically what you need to consider. So it really comes down to your budget and your risk tolerance. Okay. So hopefully that has helped you guys. If you've watched to this point and you've enjoyed the video, you got some value out of it, we would love your support by hitting the like button. And we come up with these types of videos every single week. So feel free to subscribe if you want to keep your pulse on the Calgary real estate market, or just have general mortgage and real estate advice no matter where you live in Canada. And we'll see you in the next video. Okay, my name is Felix Chan, realtor and mortgage broker with the LiveInnerCity real estate team. And yeah, we'll see you in the next video. Cheers.